Today we're going to talk about RSI and how we don't use it in a traditional fashion. Instead, we use it as a directional indicator. So what do I mean by this? Well, our algorithms are built for trending markets. In consolidating markets, our algorithms are trained not to trade. So for RSI, we use this as a directional indicator to help us with the direction of the market. Is the market going up? And how fast is it going up? Is the market going down? How fast is it going down? So we need a formula for this. This is our typical RSI formula. Give you a better example of this once we go over a little bit more on the charts here. So we're going to take this day, for example, and on the data window here, you can see the RSI value as I hover over the candles. So in a range-bound market, the RSI sticks to between, here's a ranging day, and you can see as I scroll through, it's about 50s, 40, 50, 40, between 50 and 40, pretty much all day long, until the end of the day where it gets to about 65. In a trending market, as you can see, the RSI starts to increase. Starts at 58 here, it goes to 60s, it goes to 70, 76, 77, all the way up to 82 over here, and 85 is pretty much where we get to the high over here, and then comes back down but stays in the 70s. So on this day, it ranged between 60 and 85. So what does that mean for us? Well, if you plug those numbers into our formulas, let's go to our formulas really fast. So if you look at our diagram here, RSI for a trending upward market, we will use these formulas, and a trending downward market, we will use these formulas. So as we saw, when the market is around a 50, so this first number over here to the left is going to be what the RSI raw value is, or the RSI value that we're seeing on the chart. So that number over here is going to be the left number. The right number is, after the formula is applied, what the value is. So our core value for, or our directional value for RSI is going to be between -10 and +10. So here's +10 over here, and here's -10 over here. So how does this work? Well, we have the indicator, which is going to tell us what the raw value is, and it's going to plug it into a formula, and then it's going to spit out what our RSI directional value is. So for this example that we were showing, let's go through this range here between 60 and 85. Let's see what our core value would be. This is the 1 hour time frame. This is being applied to multiple different time frames. It's going to be the 30-minute, the 15-minute, the 5-minute as well. So multiple different time frames are doing these formula calculations and giving us a value for the RSI, and then they go into a weighted average for the time frames and then spit out one final RSI value. But for the simplicity of this video, we'll just stick to the 1 hour example. So on the 1 hour example, our core value, now mind you, -10 to +10 is our range that we can get a value for the RSI. And if we see here, so as the day, we said between 60 and 80. So at 60, we're going to be at a 2.6 out of 10. Okay. At a 70, we're going to be a 6 out of a 10. At 80, we're going to be at a 10. So let's go back to the chart here. At 80, so right around here between these two candles, somewhere in this between these two candles, the value would be at a 10. So we'd be at a 10 value, which is the highest value we can be at for the RSI on the 1 hour time frame. So we would definitely be entering a trade somewhere in this candle if we were just looking at the 1 hour chart. So this would be a good entry. Even this is going to be at a 70. So to 70 on this candle here, or 70 here, actually this one as well, 70, 76, those are probably entry level candles as well if we look at the formulas. So 70 is a 6, which is a high 6 out of 10, which is a high directional score. That is definitely suitable to get us into at least tier 1 and 2 trades. And then as it increases, we will keep increasing and get into higher tiers and more trades as we go along. So when we look at the formulas, something important here is we go down. This is the important part, is when we get too far extended. So most people use RSI with overbought, oversold conditions. So once RSI gets to 70, which is right here, most people would sell here, not buy, but sell. Now, why would you sell on this candle in a trending market? Well, clearly it's going to just, people think it's going to reverse because the RSI is overbought there. We don't think that way. We think the RSI, I mean, if it were in a trending market, we don't care about that 70-30, overbought, oversold condition. We believe that it can go far past it, which it does. So up until a certain point, for our example, once we get to 80, we want to start coming down. We don't want to be at a 10 the whole time, because at some point we do have to, the market does have to either chop and range, or it has to reverse. So for us, we're fine going from 80 all the way to 90, still having a decently higher value. So the value starts decreasing. So it's from 80, as you can see the value there. Here at an 85, we're at a 6.57, which is still tradable territory. But when we get all the way down to like 90, that's a 3 out of a 10. So at an RSI of 90, we are at a 3 out of a 10, which kind of takes us out of the trading range, which is fine. And then obviously from 90 to 100, the higher we go. So here 94, 95 would be at a 2, which is 2 out of 10 is not a tradable condition. So we factor in the fact that, you know, way overbought or way oversold, we would have to lower our value. So the same thing happens on the negative side. So if the RSI is heading downward, so if it's going downward, so if we're at like a 35 on the RSI, our core value would be -4. Now negative means we're looking for shorts. So as we get higher here, if we get in the 26 range, we're at a -7.5 almost, which is really high for which is a -7.5, which is a high directional value, negative directional value, which would definitely get us into trades. So the same thing applies on both sides, and we definitely have the same thing that's happening here. If we get way too in the negative over here, so this is going to be this is oversold condition. So in the oversold condition over here, we will definitely start lowering our core value. As you can see what happens here, our low core value definitely lowers as the value gets close, the RSI gets closer to 0. So we have our extremes and we have our cautious where we're decreasing our core value. But in this instance, as we saw, our core value would be at a tradable condition from here all the way up to here. Where, you know, another example of this is right over here, where, you know, the market starts moving, and right over here we're at a 70, and the RSI 70, which most people would go ahead and put in sells. No, we put in buys. We go long. We don't go short here. We go long here, and obviously it works out well in trending markets for us. Now, this is the 1 hour time frame. This happens on the 30-minute, 15-minute, 5-minute. So we have different time frames that we take into consideration. It's not only the 1 hour time frame, and those will, you know, we will get mixed results, which gives us a big picture, gives us an overall picture of what the market is doing. And if the core value, if the RSI value is in a tradable range, then we will enter, that will help our core value get into a trading position. It's one of 16 indicators that we use to help determine whether we are in a trend or we are in a range-bound market, and whether we're going to trade or we're not going to trade. So that's the RSI. Hope you guys enjoyed the video. Please hit the like button and follow us for more. Thank you.